Decentralized finance, commonly called DeFi, has moved from being a niche crypto buzzword to one of the most important forces reshaping the global financial system. In 2026, DeFi isn't just an experimental technology anymore. It's actively converging with traditional finance, TradFi, to change how money moves, how assets are traded, and how financial services are delivered worldwide. This video is all about how DeFi is transforming traditional finance in 2026. If you're curious about the future of money, banking, and global finance, keep watching or reading to understand exactly how DeFi is transforming traditional financial systems in real ways during 2026. Stablecoins as the new payment backbone. Stablecoins, cryptocurrencies pegged to real-world currencies like the US dollar, have become a foundational part of global value transfer. In 2025 alone, stablecoins moved more than $12 trillion worth of value, approaching the annual transaction volume of giant payment networks like Visa. This matters because traditional finance has long relied on slow, expensive rails to move money, especially cross-border. Stablecoins allow near-instant, low-cost transactions around the world, bypassing routing fees and intermediary costs tied to traditional banking systems. Big companies, including fintech firms and payment platforms, are already integrating stablecoin payments to reduce friction in digital commerce and settlement. This shift is why many analysts now describe stablecoins as the WhatsApp moment for money, a technology that could collapse costs and expand financial access globally. Tokenizing real-world assets, RWAS. One of the most impactful ways DeFi is entering traditional finance is through tokenization of real-world assets, RWAS, converting tangible assets like bonds, real estate, or government securities into digital tokens on a blockchain. Instead of slow paperwork, ownership and trading of these assets can now occur on blockchain networks. This means faster settlement times, fractional ownership, and significantly expanded liquidity for asset classes that were previously difficult to trade or divide. In 2025 and 2026, institutional players began embracing on-chain token issuance for bonds and other financial instruments, helping bridge the divide between DeFi innovation and traditional capital markets. Cities and financial hubs like Dubai have even taken steps to establish frameworks for tokenizing real estate and luxury properties, offering templates for global regulators and markets to follow. Institutional adoption and hybrid finance. In 2026, institutions that once dismissed blockchain technology are now building hybrid systems that combine TradFi compliance with DeFi innovation. Large banks, asset managers, and financial services firms are experimenting with blockchain settlement infrastructure, permissioned smart contract systems, and tokenized funds. For example, some traditional financial firms have launched tokenized versions of familiar investment products, allowing clients to hold and trade them on a blockchain. This means markets that once operated during fixed hours now have 24/7 global accessibility, a hallmark of decentralized systems. Even though traditional finance remains heavily regulated and compliance-centric, these hybrid models help institutions offer competitive digital services while managing legal and risk requirements, all without replacing the existing system outright. On-chain lending and borrowing protocols. One of the earliest and most transformative DeFi services has been on-chain lending and borrowing, enabled by smart contracts instead of banks or credit committees. Protocols such as Aave and Morpho allow users to lend assets and earn interest or borrow without traditional intermediaries. Morpho, specifically, has evolved to support institutional-scale on-chain lending, offering fixed-rate, fixed-term instruments that resemble traditional loans but operate through automated blockchain infrastructure. This shift reduces the cost of credit, accelerates settlement, and opens lending services to global participants without the bureaucratic barriers typical of legacy banking systems. The result is a real, quantifiable change in how capital is allocated worldwide. DeFi and 24/7 trading decentralized finance has made financial markets 24/7, something traditional finance has struggled to match. Banking systems and stock exchanges traditionally operate within set market hours and regional boundaries, but DeFi markets remain open constantly, allowing trades and settlements any time of day from anywhere in the world. This around-the-clock market access reduces latency in pricing, increases liquidity, and enables global investors to react to events instantly. For traders and financial institutions alike, this persistent market environment is transforming expectations for when and how financial transactions should occur. Lower costs and permissionless access. DeFi's code-driven protocols drastically cut the costs tied to middlemen and legacy banking infrastructure. Traditional finance often involves high fees for cross-border transfers, loan origination, and asset custody. DeFi eliminates or reduces many of these costs through decentralized, automated systems. Smart contracts, self-executing code on the blockchain, handle transactions without human intervention, reducing friction and manual processing costs. This democratizes access, allowing anyone with internet access to participate regardless of geography or background. Composability and financial innovation. In DeFi, financial products are composable, meaning protocols can interact with each other to build new services. For instance, a tokenized asset can be used as collateral in a lending market, which in turn can generate yield in another protocol. This interoperability accelerates innovation because developers can build on existing products instead of starting from scratch, a capability that doesn't exist in traditional finance. This modular mindset has led to a fast-moving ecosystem where ideas are tested, combined, and scaled quickly, something that traditional institutions are only beginning to adopt through hybrid systems. Compliance evolution. As DeFi grows in 2026, regulators around the world are increasingly engaging with the space to ensure security and compliance. Governments are developing frameworks that allow tokenized securities and digital financial products to operate within legal boundaries, reducing uncertainty and encouraging institutional participation. Regulatory progress helps bridge the gap between trust-centric TradFi and code-centric DeFi, making the transformation sustainable and safer for everyday users and major financial players alike. The future of finance: coexistence, not replacement. Despite all the changes, DeFi isn't fully replacing traditional finance. Instead, it's transforming it. Hybrid systems are emerging where blockchain infrastructure powerfully enhances TradFi processes, offering faster settlement, greater transparency, and broader market access. In 2026, the financial landscape is becoming a fusion of decentralized rails and regulated frameworks, opening new frontiers for global finance while preserving the stability and legal protections that TradFi offer. That's all for today's video. If you found this content helpful, subscribe for more deep dives into finance and tech. Comment your thoughts or questions, and share this video with friends who want to stay ahead of the future of money.